Hi, it's Adam Hewison. I'm coming to you from the digital studios of MarketClub, and the market we're looking at today is an old friend. It's the British pound. This is the British pound versus the US dollar. And as you can see, going back to last August, we had a pretty marvelous move down, and now we've had this sort of look at sideways kind of tracking move. If you look at the video we did on the 8th of April, you'll see where we're looking for this market to actually make a move up. We're starting to see that take place now. So I want to take everything off the screen. I'm going to scope this in a little further and just a little bit further. Let's just see. That's going to be good. And I'm going to put our monthly indicator in here. And as you can see, we don't get that many signals in our monthly indicator. This is the first one we've had since August of last year when the market started moving down. The other thing that we're looking at is this market definitely looks like it's just making that kind of rounded bottom, which is really nice. So how far can this market go on the upside? Well, I think it surprised many people at how far it came down. The question is now, how far can it recover? And to get that answer, we're going to go to our Fibonacci tool. So we take everything off the screen, click here. I'm going to click on our high point right here, drag this down. And that's going to give us some really nice targets to look at for sterling. Certainly, we will be looking at the 160 level. That's a natural from where we are right now, 150, 168. We're doing this live, by the way, and it's on the 8th of May, almost exactly a month from our previous British pound, which you can see on our blog. So we could see this market again moving higher to the 50% retracement to the 168 level, and the big psychological level is going to be 170 in the sterling. So it looks to me that we're going to see some support on any kind of pullback. Certainly we can scope this in, and I want to show you a very interesting tool that we use in sterling and how you can use that tool to make money. So let's take everything off the screen. Now scope this in further. And we're going to put in our trade triangles, so our weekly trade triangles and our daily trade triangles. So here's the weekly trade triangle right here, indicating that the market was indeed going higher. And these little ones here are levels where you would have gotten in. So you've gotten out kind of like that. You get back in here, and then you're pretty much long from this level. But rather than just sort of guess the levels, let's take everything off the screen. And as you mouse over under here, you'll see there, and you can see 143.76. You'd have gotten out of that at 146, so that's almost 2.5 cents, 3 cents. And you've gotten back in at 47.72, out at 48.19, another 40 pips. And you get back in at 47.37. Of course, this is a nice one. You've almost 400 pips in this market. It looks to me that we're going to see sterling move higher. There's going to be, it seems, good support at this level right here on the 150 level, 150 area. And we're closing very well on a Friday, which would indicate we're probably going to see this market move higher on Monday and maybe test this 153.90, 154 levels. So anyway, market looks good. We want to trade sterling from the long side, or trade cable as is known in the industry and the interbank market from the long side, and would buy this market on any dips. Again, our stop point, take everything off the screen, is right here, this level right here. If the market were to move below, let's say the 149.90 level, then we would take a profit and get out of the market for the time being. But market looks good, headed higher. Adam Hewison from MarketClub. Thanks for watching, and every success on the market.